Stocks in the vaults have reduced quite significantly, both on COMEX and also in London. The industrial demand is accelerating. India is now getting into the photovoltaic cell manufacturing business. And so Indian corporations are buying silver. And I think they have taken delivery of a lot of the silver, which has been stood for delivery on COMEX. So, putting it all together, the last thing anyone in the silver, in terms of, if you like, the industrial users of silver want to see are the investors coming back in and actually buying silver. They're not in the West, just like gold. I mean, none of this buying of gold is in the West. But the moment they start coming in, then that is going to create a real crisis in the silver market. It's just going to drive the prices far higher.
Alasdair Macleod, head of research at goldmoney.com, highlights the accelerating industrial demand for silver, particularly driven by India's burgeoning photovoltaic cell manufacturing sector. Indian corporations have become major buyers of silver, further tightening the supply. Macleod emphasizes that a significant re-entry of investors into the silver market could lead to dramatic price increases. In the fiscal year 2024, India's silver imports surged by approximately 33%, reaching 1,561.8 metric tons compared to 1,173.89 metric tons in the previous fiscal year. Macleod notes that the combination of rising industrial demand, supply constraints, and potential investor re-entry sets the stage for significant price movements in gold and silver. He advises market participants to prepare for heightened volatility and potential shifts in market dynamics. Reflecting this trend, silver prices rose on Monday, trading at $30.81 per troy ounce, up 1.50% from Friday's $30.36. Since the beginning of the year, silver prices have increased by 20.97%. Regarding gold, Macleod points out that the continued increase in demand in China has the potential to destabilize global currencies. If this trend persists, it could lead to substantial shifts in currency values, especially those heavily impacted by gold movements. When central banks purchase gold, it affects the supply and demand of their domestic currency and can result in inflation. This is largely due to banks printing more money to buy gold, creating an excess fiat currency supply. Macleod's analysis underscores the intricate relationship between precious metals and global economic stability, highlighting the far-reaching implications of these market dynamics. Come along as we explore Alasdair Macleod's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
The Chinese government are not advertising buying gold. This is something happening. It's being driven, if you like, by savers' demand. And it's something which, quite frankly, I think could get out of control. And I mean, on its own, I think it could easily destabilize fiat currencies. And if you look at how gold has performed in yuan, I mean, I put together a chart this morning for an article which will be released on Thursday on my Substack channel. I can see that in real terms, priced in yuan, gold has moved along a pretty normal track. I mean, obviously, in nominal terms, it's been very volatile and it's been absolutely fantastic. You look at the chart, it just goes up and up and up, and there's the odd move down, and then it shoots up. But if you use a logarithmic scale, in other words, you actually look in real terms, then it's moved along a pretty well-defined line, and it hasn't yet really taken off. And I think the message from that is that, first of all, it is not overvalued in yuan terms. And the second is that the real run in the price is yet to happen. Interesting situation. And of course, you've got silver on the back of it too, and that's being caught in a difficult position as far as users of silver are concerned, because it's basically an industrial metal nowadays. And the move in the price of gold tends to be accompanied by a move in the price of silver. They correlate very well, with the silver's move being roughly twice as much as gold. In quiet times, silver tends to drift lower, and that's how we got to a position of a gold-silver ratio a few years back of 120 times. Recently, it's been trading, the gold-silver ratio has been trading between about 80 and 90, but on this move, it's broken down, and we're now looking at 76.5. I think that's going to go lower. I can see silver. I mean, silver on the charts just looks absolutely fantastic. Stocks in the vaults have reduced quite significantly, both on COMEX and also in London. The industrial demand is accelerating. India is now getting into the photovoltaic cell manufacturing business. And so Indian corporations are buying silver. And I think they have taken delivery of a lot of the silver, which has been stood for delivery on COMEX. So, putting it all together, the last thing anyone in the silver, in terms of, if you like, the industrial users of silver want to see are the investors coming back in and actually buying silver. They're not in the West, just like gold. I mean, none of this buying of gold is in the West. That is going to create a real crisis in the silver market. It's just going to drive the prices far higher. And I think the combination of similar circumstances in gold actually could destabilize the bullion banking community, who are all short one way or the other. So this is it's going to be interesting times. They will have, if you like, a religious moment.
Alasdair Macleod highlights a strategic shift by the People's Bank of China in its approach to gold. Rather than directly buying gold, the PBOC sells dollars, signaling a move away from the dollar and implicitly encouraging Chinese savers to follow suit. This strategy underscores China's effort to diversify its reserves and reduce reliance on the US dollar. In 2023, China's central bank reportedly acquired a record 735 tons of gold, while approximately two-thirds of this amount is believed to have been purchased covertly. The 225 tons officially declared made China the largest gold buyer among central banks for the year. Macleod notes that gold investment is highly accessible in China. Banks offer gold accounts with low minimum deposits, and mobile apps facilitate easy trading. Additionally, physical gold in the form of jewelry and ingots is readily available, often resulting in high demand and frequent stock shortages in stores. China's influence on global gold price action remains strong, with recent data suggesting this trend will continue. According to John Nieuwenhuis of Gainesville Coins, Western investors are expected to join the surge in precious metals investment soon, further driving market dynamics. Let's get back to the interview.
I mean, but above anything else, gold is money and the rest is credit. I mean, we were talking about this off air before we started this interview. And of course, governments deny it. Governments reckon that gold is no longer part of the monetary system. They don't really have an answer as to why various central banks retain their gold holdings, though if you talk to central bankers, they do actually understand that it's nobody else's liability and it has a unique value as that. They don't necessarily say that gold is money as such, but they do recognize that role. But if you go to the Far East and talk to the Chinese, I mean, basically what the People's Bank is doing is it's selling dollars. It's not buying gold, it's selling dollars. That's the way to look at it. And it's in effect, through its actions, it's telling all the savers in China to do the same. And the savers in China, I mean, you're talking about 35% of a GDP of roughly $18 trillion equivalent. That is the amount that's put aside every year in the form of savings. I mean, that's around about $6 trillion. That was yesterday's story. It's not going to the stock market. That was yesterday's story. It goes on bank deposit, but you can see that bank deposits will pay you 3% or something like that. Then there's this new game in town. This is being led, if you like, by the People's Bank. They're selling dollars. Now, that's official policy. Okay, that's fine. But also, this is something we could really make money on. You can see the driver, if you like. Now, we're looking at $6 trillion equivalent accumulating year in, year out in savers' hands. Well, I'm talking household savers. This is important to understand. Household savings, 6 trillion. That's what? That's the equivalent of about 8,000 tons, I think, of gold. No, it's more. I don't know. Anyway, they're huge figures, huge figures. I mean, if they just put 10% of that, it just cleans us all out. The way this is going, I mean, the way the Chinese like to punt things that are rising, and they can do this. I mean, all the banks offer gold accounts. So you can literally, with a minimum of around about 500 yuan, you can open a gold account. So, you've immediately got access to buying gold. As well as that, people have got apps for dealing in gold on their mobile phones. And of course, you can go into the local store and buy, jewelry, 24 karat jewelry. And, routinely, these shops run out of stock. So you can see what's happening. And of course, it's caught the Western capital markets wrong-footed, completely wrong-footed. And you have a lot of people who say, well, the Chinese are really speculating. Yeah, they do speculate. But if you think they're speculating on an uninformed basis, I think you'd be making a huge mistake. And the idea that this speculation is going to go away after it's risen a certain amount, or you get a decent shakeout and then it's a different story. I mean, this is, the triumph of hope over experience. It really is.
When central banks, such as those in China, purchase significant amounts of gold, it affects their domestic currency's supply and demand dynamics and can potentially lead to inflation. How do you interpret the broader economic implications of central banks' actions? Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.